So today we're going to be talking about dividend investing and long-term investing in general, as well as dividend increases, which is always one of my favorite things to talk about here on the channel. Now, what we're using is M1 Finance. That's what you kind of see behind me here on the actual screen. And that is the platform I personally love to use for dividend investing and the long-term investing. Now, before I go on with this video, I do want to let you guys know they are still doing a $30 bonus until the end of February. So if you want to sign up, I will have a link down below that of course gets you right into signing up, but it also does help me support. It actually helps me so I can continue making free content just like this. So if you want to go through that process, again, I'll have the link down below for you guys and we can go ahead and now get started. So what we're going to do is take a look here at my portfolio. We'll kind of break some stuff down first and foremost, and then we'll kind of go a little bit more into all of this. So I have my portfolio nicely named Dividend Dennis over here. And we are currently sitting at $22,839, which I'm pretty excited for. We're going to be talking about like the ups and downs that my portfolio has had over just like the last week or so. You could see for the day, unfortunately, didn't do very well. So it's down to $73, but no worries because I'm a long-term investor. Red days don't really scare me. If anything, I'm excited that I'm putting more money in. You can actually see here. Let me switch over to the week here. We're actually down to 175 on all of that. And then if we go down to the month, we're actually up $594. And this is why day to day, if there's down days, it's not a big deal. Or even down weeks, heck, even down months is totally okay too, because we are on long term, we are moving upwards, right? You can see on this value over time graph, we're just moving upwards. If we jump over to the last quarter, let me kind of clean this up a little bit. We're up almost $2,000. Now, in case you don't know how this works, this is equaling market gains as well as earned dividends. Plus, if I sold anything for profit is also in here, which I did do. So you're going to see here, we're doing pretty well for the month, the quarter. And then if we go to the last year, you can see here, we're up almost $4,200, which is awesome. Don't worry about the percentage there, but $4,200. Now, one thing I do want to kind of keep in mind too, look at this. In one quarter, we made about $2,000. In the year, we made about $4,000. So out of, one quarter, we almost made half of what we made in, gains at one time. So it's, to me, a really important thing to stay steady with investing. Now, for those who are still just getting started with investing, I do want to show you this. And I go over this every time because I think it's so critical for a lot of beginning investors to understand. Check out my value over time graph right over here. So you can see, I'm just double checking, make sure it's on screen. Actually, let me zoom in a little bit. Perfect. So you can see right over here, I started with $100 in this account. And the reason that is so important to note is because for a lot of people, they see, this $22,000 up here and they're like, oh man, that's so much. I don't know if I can do that. No worries. Start with $100. M1 Finance, minimum is to start as 100, and then after that, you can do smaller amounts, and that's all you got to do. Again, I'll have that link down below if you do want to sign up, but do it. Get started. Get into the rhythm of investing. Once you start understanding how you want your investments to go, put a little bit every single week if you can. Ideally, even a minimum of $10 a week. You might have to manually buy into your stocks, which is fine with M1, but then you can start bumping it up more. Once you get more comfortable, you can do $20 a week, then $30 a week, then $40, then $50, then $200, then $300, whatever you're going to be able to do, because you're getting the rhythm into place. And that's a big part of this process, is getting your rhythm. Because for a lot of people, if you don't stay consistent with investing, it's not going to work out for you. You're going to get like that pit in your stomach when the market's down. You might stop investing, all this different stuff, which is really important for a lot of people to make sure you understand that staying consistent is so big, which is why I actually started a Facebook group around M1 Finance. So you guys can check out the link in the show notes. It's free to join. All we really do is just talk about M1 Finance and investing in general. Every Friday, we actually post how we did for the week, because I feel like it's a really important thing to get everybody motivated to stay on course. So just kind of something you guys can do as well. So if we go over to the last week, I just kind of want to take a look here. So I did a little bit more investing this last week just because the market's been down a little bit. You can see here, based off of the dollar amounts, obviously, my tech pie has a lot more than everything else. So it's down about 1.66%. I think that's the highest. Nope, right here. We got real estate down is actually 2.28%. So We've been buying a little bit more into like DLR. I haven't been doing more into Realty Income, which is the monthly paying dividend, because at this point it's over, well, just barely over $60, and I don't really plan on buying it when it's over $60, just because I focus on dividends, and like I said, I like to pay attention to that stuff. So if we go to my activities here, we can see here on the 18th I did $100, bought into 6 stocks. I did all these manually, which for any M1 Finance users, you can manually buy into stocks. Like I mentioned earlier, if you do like the $10 a week, which would be awesome, you do have to manually buy in. It doesn't auto invest for you until there's over 25 in the account. So no worries, you can still have your money working for you. You just had to do a little extra work. But you can see I did DLR, which I was down in, Lockheed Martin, which I'm actually fully down in overall. And then we did a little bit into Apple because they've been kind of on a downward trend lately. Johnson & Johnson, they have their ex-dividend date coming soon, which I can go over if I recall that later. Did a little bit into Google just because I'm still working on getting a full share, which M1 Finance lets me do fractional shares. And then NextEra Energy, which is also coming up on its ex-dividend date. And we'll talk a little bit more about, again, why that is important, or at least why I want to kind of pay attention to that. So I did a few of those. But then if you look here, I did a $25 one the day before. This one, oops, that was just the actual deposit. So this one right here on the 17th, it actually bought into Lockheed Martin and NextEra Energy. So you can see I'm constantly putting more into these stocks. The reason it's more than 25 was because I got paid out a couple dividends, which is awesome. But I want to show you guys something. So here's an example with like Lockheed Martin. So I bought it on the 17th at the price point of $334. And then I think, if I'm not mistaken, back on the 16th, so one day prior to that, I did 3 purchases this week. Lockheed Martin, $338. So what happened was I bought it on the 16th, and then it goes down in price because that's $338.45. And then let's see here, $334.64. So in the span of one single day, pretty much, the price point went down at least around $4, give or take. And, to a lot of people, that's like, oh man, like it keeps going down. Should I keep buying? Well, I like dollar cost averaging, which means that whether the price is going up or down, I will just keep buying in. And that if it keeps going down again, no problem. I'm not worried about it because I'm wanting to hold this long term. So let me go into my industries and energy sector here and look at Lockheed Martin. So I'm gonna look at this really quick. The average share price right here is $357.69. So out of the 2.29 shares that I have, which doesn't seem like a lot, but that's pretty much around $775 in value overall. What this is, I don't know why that's moving. Hold on. Let me clear that up. So what that is saying is that right now the price point of this stock is $337. So if I keep buying more shares, my average price is going down because this is cheaper than what I averaged out so far into the stock, which for a lot of people, that is really hard to do because you're like, why would I buy something when it's lower than my initial purchase price, which means I actually have less money into this than overall. Now, I did earn some dividends, so this negative $40 in gains is a little misleading for some people. My total net gains, which is a negative, of course, is $45.23. So just kind of something to keep in mind. I'm down $45 if you don't include the dividends. And to some people, that is very scary. But to me, I just say, hey, I'm planning on holding this company for a long time. I don't plan on selling it. I want to earn the dividends. I want to focus on this company. So buying more as much as I can is going to be really impactful. And I'll show you guys what I mean by this too. Because if I go to my activities, I can actually break this down just a little bit more right over here. So just bringing up Lockheed Martin. So you can see here, I've done all of these purchases, right? So you're seeing $25, $12.50, $15, $20, good chunks of money. If I kind of jump, let's jump back a few months. So, I mean, it doesn't seem like it's a big difference, but it is a big focus for me right now because you can see here, most of the time, like back in September, this is actually a good thing here. Let me see if I can, yeah, so it's still on screen there. So back in September, this is a great example. So when the stock was actually doing pretty well and it was high up and probably higher than what I originally bought it for, I was putting just small amounts, 722, 435, 521. A lot of this was M1 kind of doing its smart dynamic investing, which is great. So I just kind of let it do its thing because it was kind of riding high. But as soon as it started going down, it wasn't performing as well. That's, you could see here, I started doing more towards October, where I started doing actual manual buys, 10, 15, 15, 21, 10. You could just see those numbers increasing. And then when I jump over to the current time, I mean, there was, $40, $40, 20, 35, 25, 35. You could see the increase that I started doing because I saw the price point going down and I wanted to average out. You saw the difference in the price that I paid versus what the actual stock price is today. And so it's down. So why do I do that? It's, again, because I dollar cost average and I believe in the company. And I think that long-term, it's going to be very beneficial for me. So, but like I said, I did a couple purchases this week. So I did my initial Monday deposit, which I actually did 300 instead of 250, which is really nice. Then I did technically an extra 25 and then $100 pretty much this last day. So those were really nice. And then let's take a quick look at dividends for this last month. So you can see over here with AT&T and all these other stocks here. This is what I've earned so far in dividends. I'm kind of like highlighting it in a big box. We got paid out from AT&T for $14.56, Apple for $3.20, Ally together for these two is $2.48. We have these two from AbbVie, one for 59 cents, the other for $3.90. Hasbro, these two together, we got one for $2.04, the other one for 24 cents. I don't know why they split these up. I got to figure out that answer. We got P&G right over here for $1.77, and then Realty Income, which is my monthly paying stock, at $2.91. If we take a look at my dividend tracker, let me go ahead and zoom in here and kind of move this stuff around. So we're going to take a look right over here, and you can see, so right now we have earned a total, with still more dividends to come, $32.09 in dividends. Here's a really cool thing. I'd like to compare this to the middle month of the last quarter, or even what it was from last year. So first and foremost, February of 2020, we only did $2.35. So we blew 2020 out of the water, like just annihilated it, with, again, a few more to come. So at the end of February, I'll post a video showing you guys how much exactly I made. If we look at the middle month last quarter, so in Q4, we earned a total of $30.20. So we're actually up pretty much almost nearly $2 in increase from that last quarter, plus, again, more to come. So this has been pretty incredible so far. For the overall quarter and the year, it is $57.14. That's huge. That's, I mean, we're already creeping up on, getting some real good change here to compare to 2020. We definitely annihilated the first two quarters combined from 2020. We are close to Q3's numbers from 2020 as well. So I'm excited for that. If I can, let me move this a little bit here this way. You can see that on average, between the 2 months thus far and what we got paid out, we're averaging about $28.57 a month. Obviously, a lot of people want to get to that $1,000 goal, which is going to be great. But then we want to hit even bigger goals like $5,000, $10,000, $15,000 a month. And, one day we'll get there. So far, paid out dividends, we earned a total of $249.67. And of course, we get that reinvested back into the portfolio, so that way we can keep it growing, because that's a big component into this as well. We're not keeping this money. We're having it reinvested to get more stocks, to get all that growth. Because I mentioned earlier, let me close this off here. So if I reset this, so I mentioned earlier that I deposited $25 the other day, but because of some of these dividends that paid out right over here, those added together with my deposit made it a $36.52 purchasing for that day. So I had extra purchasing power that I wouldn't have otherwise if that money didn't get paid out to me. So I'm getting that money and like right away, just putting it right back to work for me, so these companies can pay me out. Now here's a really cool thing that I like to do too. So let me switch over to seekingalpha.com. Can I get this back over here? Okay. So I do have on my Facebook group, actually, somebody that was asking me about my Seeking Alpha account. Now, I have my account actually linked up from M1 Finance to Seeking Alpha. I do the free version, so I don't do the paid version. It's not an endorsement or anything, but I do link this up. And the cool thing is it has all of my stocks, of course. I can go to my performance tab if I want to, so I can see how like my 5-day performance is doing, everything else based off of my stocks. I can look at my holdings, based off of the amount of shares that I have and the costs and all these other things. I think this is behind a little bit, but anyways, what I want to do is go to the dividends tab here. Obviously, we talk about dividends. I love long-term investing and I want to earn some really good dividends long-term. So this is something I do when it comes to trying to figure out where I want to invest my money, because it's twofold. I've talked about this before in the past. What I'll do a lot of times back here on the main portfolio is I'll go to my holdings tab here with M1 Finance. And by the way, for anybody who wants to know about my unrealized gains, this might seem like a drop from before, but my unrealized gains is about $3,400, which is about 18%. The reason it's lower is, one, we had the market go down over the last month, the last week or so no problem there. And then two, I actually sold out of a stock, but kept that money and reinvested it into something else. So when I do that, obviously I'm going to have to pay taxes on that stuff, but that takes it away from the unrealized gains section. So that's why I like the money weighted return on the front end with M1, not for the percentage, but for the dollar amount, because I like to go here and I like to see this number right here. This is everything I've ever made in unrealized gains, actual gains that I've realized, as well as earned dividends as well too. So that's what that number actually equals out to, in case you didn't know. Anywho, so what we're going to do is look at this, and I come into this section here and I click where it says unrealized gains. If you click it the first time, it'll put you through based off of the dollar amounts that all these different stocks have had. But if I click it one more time, it actually goes the opposite direction. So it's going to show me the stocks that are not doing as well because they are in the negative. So this is the first thing I kind of realized of like, what stocks do I want to put my money back into, whether it was from dividends or my weekly deposits or maybe extra deposits, because that week has gone like down really, really significantly. So I'll look on here and I'll say, ooh, okay, Lockheed Martin. We talked about this already, right? It's been down for a while now. Like it's like legitimately been down for a couple of weeks, maybe like a month or two or three. And you can see here that I'm actually down without the actual dividends earned, 5.53%, which is $45.36. And so what this is telling me is that, hey, I have some opportunity here to dollar cost average, which we saw earlier. Of course, you can see we also have AT&T right now where we're down about $20. This one right here, which is the SPYG, I'm not too worried about it because we just transitioned from one ETF to this one. So this is a little skewed here, so I'm not really worried about that. Then we have Texas Instruments, which is actually a newer stock in this portfolio. It's a restock into this portfolio because I had it before, sold it, and then are getting back into it as a whole. So I'm actually down just a tiny bit with this one. And then we have DLR. We kind of mentioned this a brief moment there earlier. So we're down with DLR, not by a lot, by 0.19%. That's obviously pretty much nothing. And with the dividends I've earned, we've already broken even at that regard. So what I do is I look at these companies and say, okay, well, which of these companies is potentially coming up with their ex-dividend date first? And so I can cycle through this as well here on Seeking Alpha with all this information. So what I did is I went through ex-dividend date, so it's showing me the one that's coming up the least. So it's like the last one out of all the ones that have been announced. And which, by the way, if you don't know what the ex-dividend date is, that is effectively, which is this thing right over here, that's effectively the day that was the last day to have purchased into a stock. So I should say the day that you shouldn't, I can't even talk anymore. It's effectively the day before that was the last day you can actually have your money invested. So I'll show you here what I mean. So I'm recording this on the 18th. So that means because the markets are already effectively closed, anything on the 19th and on is, what I can look at. If it's the 19th, I can't invest into that anymore if that's the ex-dividend date, because that means you had to have it invested by the 18th. So as an example, we have Microsoft here. So Microsoft's ex-dividend date was February 17th, which means the last day you could actually have your money invested was on the 16th of that given time to be able to be qualified for the dividend that is going to be the payout date, which is March 11th, as long as you hold it by the, I'm like dropping the name right over here. What's the name of that? Let me go ahead and switch over here. If you hold it by the what is it called? The record date. That's what it was called, by the record date. So it seems a little confusing, right? You have to have this stock by the 16th, like we said. You have to hold it at least until the 18th, so you can't sell until February 19th. And then you actually get the payout on the 11th of March. So theoretically, you could buy on the 16th, right? Boom, you're check marked for this. You could sell this on the 19th. I wouldn't personally recommend this, of course. So you're checked off on the record date, which means you will actually get the dividend payout even if you've completely sold out of the stock. And I've had that happen before to me too, where I've actually waited till the ex-dividend date / the record date, because sometimes they're not always one day apart. Sometimes there's a little bit of a bigger gap. And then I sold a stock after I passed the record date, and I still got the payout even if I didn't own the company anymore because I owned it past the record date. So if that was a little confusing for you in the past, hopefully that cleared it up for you. If not, you could just leave me a comment down below. Maybe I'll try to like break that down a little bit more. Let me just go in here just so that way I don't have this timeout on me. All right, so let's go back here. So I look at these dates. So based off of the date that I'm recording this as an example, anything, oops, let me go here. So anything beyond this line here underneath is past the expiration or the ex-dividend date. So all of these stocks are no-go anymore for me because they're past that. Now, any of the stocks above are still part of the ex-dividend date because like Johnson & Johnson is the 22nd, which means I still have time based off of the date that I'm recording this and the ex-dividend date. Same thing for Next Era Energy, Lockheed Martin, Pepsi, and ADP. Now, if Lockheed Martin LMT sounds a little familiar, that's because that was the one we were just talking about before, which is currently down in my portfolio. So I'm like, okay, well, the stock is down and the ex-dividend date is coming up, which means if I own more shares or even fractional shares of that stock by the 25th, technically, I'm going to get more payout for my dividends. Now, obviously, you know, this is contrary to some other people who care all about growth, and that's totally understandable. But when I think about, well, if I put a little bit extra money now, especially because it's down, I'll get that nice dividend. So let's actually go into Lockheed Martin and kind of look at some of these numbers here. So first and foremost, actually, let me go look at the 5 days. So 5 days, it's been down about 2.09%. The last month, it's down 3.54%. And then in the last 6 months, it's down 13%. So you could just see here, it's just constantly going down. And I'm just throwing money at it, like I said, at this point. So let's go to the dividends here, because this is very important. Let me just make sure this doesn't close out again. Okay, so right over here, so the current dividend right now is 3.10%. You can see over here, obviously it pays out quarterly, so it's every four times a year, I should say. The current payout ratio is a whopping 39%, which is fantastic. Anything underneath 60% is great. That means there's room for growth, and that is a really important thing to kind of look at here too. So right over here, we're looking at all this and saying, okay, well, if I'm buying in more and more, my yield is going to be 3.1% or whatever the price point is at that time. And of course, because I'm buying in fractionals, that has an impact as well, because I'm not buying it in, you know, full shares. I'm buying it, I don't know, let me see here. If I look at this last one for 25 bucks, I bought in and I got effectively 7%. Yeah, about 7% of a share. So, you know, I get 7% of whatever the dividend is, which is the $2.60. So it's not a lot, but it does add up, right? Because I'm still buying in at a cheaper price point and I'm still getting the dividend. And what's really cool is long term, I will also get the dividend growth. And I'll show you what that is right here. So you can see here, when they announced that last dividend, which is the one that I'm waiting for, the ex-dividend date is February 26th. So like I said, I still got time, and we get paid out $2.60 a share. The last time prior to this, they were originally paying $2.40 when I started buying into Lockheed Martin, but they increased their dividend to $2.60 $2.60, which was an 8.3% dividend increase. That's massive. That's a huge percentage increase from the year before, especially during, everything that happened in 2020. So I'm making more money on the stocks, on the shares that I did buy already, which means my yield on cost has actually gone up, which is essentially my dividends getting paid out more for having ownership in the stock. So I'm kind of getting some great sides for the stock being down, which means I'm buying in at a lower price point, having a higher yield, and then hopefully next year, sometime in September, or this year sometime in September, that they increase their dividend anything remotely close to this, and that is just going to be even more of an increase for me. So that is like a win-win-win for me. And then one thing I want to show you too is this whole thing of, it's been down for a while, right? If we go look at the last 5 years, check this out. So last 5 years, it's gone up 57.48%. So about a little over 10% a year, give or take, obviously averaging it out. But look at this. So back in 2016, it peaked at 266, and then it went down for a while, and then it went back to 266 in November. So how long was that? So August to November, and it kind of got back. Then it dropped a little bit, and then it had this really nice steady climb for quite a long time, dipped a little bit, had a really nice jump, kind of dipped, nice jump, and then it had a really long dip for a while, had a nice increase, then end of 2018 happened, and then it had that huge dip back to 245. But then it goes back up, it has little bits of dip, goes back up, and then early 2020 happens, and it just drops like a rock. Goes up, goes down. So you can see that it consistently has this whole motion of going up, going down. But I think long term, we have hope that it's going to keep going up. The dividend pays out really nice. The PE ratio is, to me, great. And everything else, in my opinion, for what I'm trying to do with my portfolio is looking really good. So that's why you see me buying more into Lockheed Martin. And you can see here actually, let me bring this down. Right over here. 2.29 shares. Again, not a lot, but with that being about $775 in value, that's a decent chunk of money, being put into this company. Hopefully over time I can keep adding more, and that way we get more shares, get more dividend growth. Obviously, if the stock goes up, that's great, but because we're in it long term, I'm not too worried about it going up anytime soon, and I'll just keep chunking in more and more money every single week as I'm making those big deposits. One other thing too, so when we go back to this list here, let me go back over here. Go to dividends. So we're going to X dividends. So Next Era Energy is also another one that's coming up as far as X dividend dates. It's actually the day before Lockheed Martin. So you kind of saw that happening too with my holdings there, where I'm buying Next Era Energy, like $25 into that one. And then back on the 16th or 17th, I bought another 24, which, equals out to almost 30% of a single share. So I have a decent amount into that one, which let's load this up here. So you can see here, I have about $1,032 in this stock. Right now, I'm actually up $58, including dividends. And then I have close to 13 shares. So right now, my average share price is $76 and the stock market price is $80. So if I buy more in, my price is going up, but I'm not too worried because it has been doing really well thus far in my portfolio, and it's only been around for so long. You can see starting value was October 7th. So I've only had this for a couple months, but my ex-dividend date's coming up soon. But this is one really, really cool thing about dividends that, again, a lot of people talk about this, and that is the fact that this dividend is obviously paying out soon. So real quick, before I actually tell you the really cool news, the dividend rate over here is 1.9%, not a big one. Obviously, a lot of dividend investors talk about the 4% rule, but seeing as I don't need this money for another 15 or so years, I'm not worried about 4%. I just want something with a decent yield that has really good growth. This is the stuff that I like. You saw with Lockheed Martin, it was 8.3% over the last September. So what I'm looking at here is, if we go to the dividend news, kind of covered up there. So just earlier this week, actually, I think it was last week. Yeah, it was Friday last week. On February 12th, they announced that they are jumping their dividend by 10%. That is huge. That's double-digit growth on your dividend payout. Now, to a lot of people, that doesn't seem like anything, but first and foremost, would you not love a 10% raise for having done nothing more than just have ownership in the stock? Obviously, you're not sitting there like doing all the work for it unless you actually work for the company. But 10% raise, that is massive. Obviously, it's not always guaranteed that it's going to go up at this percentage, but based off of its history, this was kind of something I was expecting to kind of get into as far as an increase. And it's a little wobbly based off of the split that they had recently, but they were paying out a dividend of 0.35, so 35 cents a share, and they jumped that up to 38.5 cents a share. So I want to show you how impactful this can be. Let's bring up the calculator. So we do 0.385 minus 0.35. So that's 3.5 cents in total as far as change right there. So what I want to do is show you here. Let's clean this up a little bit. So we talked about how we have almost 13 shares. So we have 12.79 shares. So if we bring this up here, so we're going to times the difference by the amount of shares that we have, which I might be buying more, by the way. So we'll see if I get more in there before the ex-dividend date. So that is an extra 40, let's just say 45 cents that I'm going to make on top of what I was already expecting to get paid from this company. So 44 cents might not seem like a lot, and it's not, right? Like 45 cents, I mean, that's not even a 2 quarters, put together there. But this is per quarter for as long as they're paying out dividends, because that increase has happened now. And it is going to have a big impact on me down the road, because if next year they increase it by another 10% or somewhere close to that, I'm going to have more shares. I'm going to have a bigger impact on it. And again, this is only per quarter. So in a year's time, that is an extra $1.79 that I'm adding to my overall income from this stock for having done nothing more. I didn't buy more into it technically for that raise to have happened. It just happened for me. And the amount of money that I need to put into that stock to make $1.80 per year is actually quite a bit more. And that's the thing that most people don't talk about as well too, is to get this amount of payout. Because let's see, what are they paying out right now? The 38 cents. Well, before that it was 35 cents. So like you have to put a decent amount of money in to be able to make the $1.79 extra on top of the overall dividends. Because if I actually just add in what I have now plus the new dividend, 0.385, I'm going to be making just in this month or when it pays out $4.92, give or take. And then if I times that by 4, in a year, I'll make $19.70 off of off the total dividend from this company. So you saw that $1.79 for the whole year. That's just added on top, right? So if it wasn't for that 10% increase, and let's say I didn't buy anything else into the stock, I would have made instead $17.91. But because of that increase, I'm making extra money. So just imagine how much more I have to put in there. There is a number. I don't really want to do the numbers right now to figure out what it is as far as how much more I have to put into this stock right over here, Next Air Energy, to get that $1.79 paid out to me in dividends. Because if you think about this, right? Let me go back into here. You know what? Let's see if we can get close here. Let's bring this up. Okay, so for one full share, it's 39 cents. So what's $1.79 in a year? Oh, hold on. That's not what I'm doing. So it's $1.79. So you can actually kind of do this pretty close because the annual payout is $1.54. So you would effectively have to have put in almost $80 more to get that 10% increase that I'm getting now as far as additional dividends. If that makes sense, the way that'll work is, let's say they didn't raise the dividend by 10%. In order for me to make an extra $1.79 in dividend payout, I would have effectively had to put in probably $70 to $80-ish into this stock to get an additional $1.07. Actually, I'd had to put more than that. I'd had to put almost like 90 to $100 into this stock to get an extra $1.79 in dividends, which I didn't have to do, and the company raised my dividends by 10%, which effectively now is giving me $1.79 a year more than what I was originally expecting. So it's really cool to kind of think about it that way of like, Well, that's as if I added in an extra, $100 into this company to get that $1.79 payout. Like it's awesome to think about stuff like that. And, long term, that yield on cost is what it's all about, right? Like we look into this, and I show people this all the time. The yield on cost starts left to right. So this is current moment right now. And then this is right now in this graph is 5 years later. So you can see here, right now, the yield is about 1.90% or so, like we talked about. If you held this stock 5 years ago and bought in and held it, you're actually getting paid. You can see a little underneath that line, 5.39% dividend based off of the increases that they've done every year and buying at that purchase price of 28. What was that? 28 something? 28.58. So, but when you bought in back 5 years ago, the stock price was, 28.58 before splits and all that, or after splits. But that yield wasn't 5% at that time. It was probably closer to something around like 2, maybe 3%. But because every year they've been increasing their dividends by a healthy amount, that increases your yield on cost over time. So you're getting appreciation on the value of the stock, but then you're also getting the dividend increases too, which is just mind blowing for me. Like I can only imagine, the value that you would have if you bought all that stuff. Like I can obviously do the math if I really wanted to, but just overall, I think that's amazing and stellar. So my hope is with Next Energy and Lockheed Martin and all those is that same style and situation happens for me, where not only am I increasing the value on the front end with, the stock price going up, but I'm having dividends increase, where that means less money I've had to put in to be able to get that money coming out, because they're raising my dividends by 10, 15, 20%. Some companies have done 20%, which is really, really cool. But I think it's really important for people to keep learning and growing. So for me, I think it's always important to stick with it, stay consistent, like I talked about earlier. If you're interested in checking out M1 Finance, again, link in the show notes down below. You still got time for that $30 bonus, and it does help support me and this channel so I can continue to do free stuff like this for you guys. But more important than anything else is to keep on learning and watching these types of videos, because I think it can really help you get a better understanding of long-term investing as well. So I'll have a video right over here for you to be able to check out and watch so you can continue your journey. My name is Dennis, and I will see you in that next video.